Hello and welcome to Leviathan News. Today is May 29th, and we are going to dive into some option strategies today. I love options. I think they're an amazing product, and we have them inbuilt to DeFi with how the AMM LPs work. And there's been quite a few projects that we've spoken with that are taking different routes with this, but today we have DeFi Devin from GammaSwap, who is here to help us walk through some of the cooler trade strategies that we'll be able to take on GammaSwap. So, hey, how you doing, Devin?
Yeah, no, excited to be here and thanks for having me. And yeah, that's pretty well put. Essentially, GammaSwap, we're the first perpetual options protocol. And the way we create these positions is by borrowing liquidity from AMM. So yeah, what we kind of realized is that the way the way that these collaterals are being balanced as an LP and the impermanent loss is created is kind of similar to an options market. So, and you could basically create options or leverage with any type of asset. So that's what we've done. We're live on Arbitrum and Base right now, going on Ethereum soon, and yeah, just looking to get more exposure and also just help educate the market a little bit because it's like an option, but it's also a little bit different.
Yeah, and as always, I'm joined by DeFi Advisor. Good morning. DA is patiently.
What's up? I'm unmuting while I'm finding the right tab. I was just sharing the stream. Nice to have you on. Nice to be on as always with you, Sam. And great to have GammaSwap for the first time. A project that I've heard so long ago, actually.
Yeah.
It's about it.
But before we get into GammaSwap and talk about some strategies, let's talk about the news, because we didn't really discuss news yesterday. We talked about the FIT21 bill, which in itself is massive news, but I think there's some other crypto and DeFi news that we wanted to get to before hopping into Gamma. And the first big one is a story that we've been covering a little bit, and that's that under legal pressure, Zkasino has opened their bridge back up at a 1-to-1 ratio for 72 hours. This comes after like widespread derision, legal threats, people claiming they're hiring hitmen after Zkasino essentially changed the terms and conditions of their bridge and said that, oh, hey, the $33 million of ETH, I think it was around 10,000 ETH, we're going to keep it now, and it's going to be it's ours now. That bridge that we said was 1-to-1, and we would give the funds back. We're not giving those back anymore. So one of the founders, Elham Norazi, was arrested by the Dutch police. He was taken into custody, and he was given a court date in August, I believe. And man, people were just out for blood for this. I've been chilling in the Telegram group where people are kind of collaborating on information that they have, and nobody is happy. Even now, this whole bridge situation where they're opening it up is not making anyone happy.
And what's this like? What is it? Why is it only for 72 hours? Like it's like a special deal.
Yeah, something like that.
72 hours, but after that, fuck you again.
Yeah, exactly. So if you miss the 70, I know.
How can you even make this stuff up? Like, if we were to make this stuff up, we wouldn't be able to.
So what happens is that bridgers have 72 hours from yesterday until the May 31st, which is in 2 days, to essentially forfeit their Zcash tokens, and they'll get their funds back supposedly at a later date in the future. This is not like an automatic bridge. You have to essentially give your Zcash tokens back. The contract is a little wonky, and I think that it was kind of slapped together pretty quickly based on the comments that I've seen in the recovery group. And in a couple of days, you'll get your ETH back. But 72 hours seems really short for this type of claim. For the amount of legal pressure that these guys are under, in committing fraud, just straight up fraud, you would think that they would open this bridge up for a longer period of time.
And also, like, why not indefinitely? Like, what does it mean? Like, after the 72 hours, all of a sudden it's legal to take people's money? Like, maybe I'm missing like a key element of the story that makes me wonder, like, how can it even be, you know?
Yeah,
like,
so after 3 days...
Who's deciding that it's just 72 hours and why?
Well, yeah, the team, the Zkasino ruggers decided that was 72 hours. And if you don't do it in the 72 hours, then you forfeit your ability to get your ETH back.
Wow, man, this is a new record. Like, I don't remember this kind of announcement by a team.
Yeah, there's going to be an insane amount of fallout from the Zkasino rug, because it's still a rug, right? Even though they're like changing the terms back so you can get your ETH back, the 72-hour claim period is just too short. I would also assume that any of the pre-sale SAFT seed investors are going to file for fraud, because the team has essentially lied about so much regarding their development, their revenues, the amount of funds that they've raised, this refund. Even if the criminal conviction is kind of thrown out because of this like breadcrumbs that are being thrown back to the plebs now, that they stole money from, I think there's going to be massive legal implications for these people, and this whole Zkasino saga is going to be tied up in court for the next several months.
And it's also like surreal to have both these cases run in the Netherlands. Alexei Pertsev on one hand, and this thing. Like, if only the justice system could have actually been utilized for what it should be utilized all the time, could have been, like, what a huge difference for something that in some people's mind is like parallel and the same.
I know, it's pretty incredible. I'm just shocked by the brazen, just the brazen attitude of the team in trying to steal that much money, and then giving this small window for people to take their funds back. It's just malicious at this point, and really unfortunate for the people that deposited their funds in.
But isn't it like a cause for another arrest? Like, who are they to close the window again? Like, I don't get it.
Yeah, exactly.
Does the other like, can you even imagine like a protocol doing it? Like, I don't know what to say.
What do you wild? Yeah, that just like, in crypto, a lot of people just accept this as like normal. Like, a lot of pre-farm contracts or pre-sale contracts are just a multi-sig, and people deposit funds, but they're not actually like trustless. When it probably could be done with a smart contract. I guess people like figured like this guy's reputation was on the line, and he's been in the space for a while, so okay, maybe it's not that risky, but yeah, I mean, it happens all the time, unfortunately, in the industry, so you have to exercise caution for sure.
Yeah, but his reputation, like, as it came clear in the wake of this rug, was that he had rugged other projects as well too. So
yes.
There's this really like strange path of high profile ruggers that the more money that they make, the more brazen they become, and the more money that people give them for some reason.
Yeah, they go up the rugger ladder.
Yeah, and it's weird because if you're just doing it for like a couple of $1,000s or whatever, like, nobody's going to give you any money. But the bigger that you get, the larger your following becomes, and the more money you're just able to steal every single time. And we only have to look at many of the other influencers, builders, and other just nasty people in the space that continue this cycle of abuse without going to jail.
Yeah, because I think that first of all, it's like the key point is right in the sentence over there. Like, what are the repercussions this action, and do we as an industry or as society make sure to enforce like the actual law on this stuff, while again it's usually enforced at the exact wrong circumstances cases. And also like I think that these ruggers, like it's a very narcissistic thing. Like they always want. It's not only about taking the money. Like these people can make money. Yeah, you know what I mean. It's about this being this kind of an outsider and this fame of fucking people over. You know what I mean? Like it's not. These people have like they're smart. They can have all kinds of ways to make money, whether it's and like do it in a legit way, but just like you say, they do the first drag for something, and then it's like they're trying to prove something in my mind.
Yeah, and it really takes a lot to get caught and sent to jail. I mean, the other big story that came out yesterday was that Ryan Salame, one of the lieutenants at FTX, was sentenced to 7.5 years in prison, federal prison, that is. And he is also going to have to forfeit several $1 million as well too. So I really love crypto Twitter because we get just interactions that are just incredible. Ryan Salame, after he was found guilty, came out, starts tweeting. And
after he's found guilty, he starts tweeting. Like, don't they take their phone or something?
I guess not. But he like quote tweeted himself talking about how it's so powerful learning who your friends are. This is back in 2022. Very excited to grow with them in the long term. It's not hard to genuinely figure out who cares about customers and who doesn't if you look past the insanity. And then yesterday he said, yeah, it's a terrible tweet, like the worst. I get it. I cringed really hard. And then we have user Titty Respecter, who says, you're going to jail for molesting my finances. And then Ryan actually responds to the Titty Respecter and says, no, I'm going to jail for campaign finance fraud and unlicensed money transmitting. Only on Twitter. This stuff is free.
Only on crypto Twitter even, I think.
I know.
Yeah, man. By the way, I read somewhere that actually the prosecutors asked for less than what he actually got.
Yeah, I believe that they tried to get more or tried to do less, but the judge went the full amount up to 7.5 years. And then he also has 3 years of supervised release. He has to pay $6 million in forfeiture and $5 million in restitution.
And what do you say? Did he either way get to cash a lot of money in?
I don't know. Apparently there's this like $55 million loan that he says that he had no idea existed.
Man, okay. Listen, I have no idea, but like if I had to bet, like these people, like they made a lot of money. Like these years that they're gonna do, like I'm not saying it's a huge deal, like to do these years, and but like in the way I'm envisioning it, I think a lot of them are gonna keep somehow some of that money. They knew what to do with it and where to like hide it. That's my guess. Only a guess, of course.
Wasn't he saying something like that his lawyers the Alameda lawyers advised them to take out loans instead of selling their crypto, and that was like the reason he was in jail, which is I don't think there's anything problem taking out loans. Just I think they were lying about the collateral they had to take out those loans.
Yeah, I mean they lied about everything, and the whole organization was corrupt that we know now.
Was corrupt and like on a few different dimensions. I think the whole operation there was corrupt.
So now that Ryan's been sent off to jail, or sorry, not jail, but prison. Big difference.
What's the difference, by the way?
Jail is where so when you're arrested, you're sent to jail, and then after you're convicted, you're sent to prison.
Okay.
Yeah. So jail is kind of like the holding area before you get sent off to the slammer.
And the slammer is like the actual prison, you say?
Yeah, it's like federal bang me in the ass prison. It's not fun. And it depends. We don't know where. I didn't see anything about like where he's actually going, but like federal prison is not a good place.
Yeah, but don't you think that, like, at least from the movies and all the rumors and that stuff, don't you think that like the rich people like often get like great conditions because of the great connections, like in different prisons?
Not in federal prison.
No.
Yeah. So
yeah, Sam, I'm just wondering, like, do you get how often we do these jail casts and prison casts? Like it's like once in a week or two that we that we basically have like the same stream with different names and like different numbers of rug. It's surreal.
I know. I think it's slowing down a little bit though.
Hopefully, and luckily we have some like decent builders who actually build stuff to also talk about some positive stuff.
Yeah, exactly. We'll just wrap it up there for news for the day. We like Jailcast here at Leviathan News, and it's always nice to see the downfall of shitheads that go out and cause fraud and other nastiness in the industry.
I definitely believe, I definitely prefer this kind of jail cast or prison cast rather than talking about Alexei Pertsev. Honestly, like at least this time they're going after an actual criminal.
Yeah. Can we, before we jump into GammaSwap, let's talk about one last thing. So Consensus is going on right now, and it is in Austin, and apparently the weather is just nasty, like really, really nasty. There's like tornadoes, hail.
What?
Yeah.
Isn't it summer over there now?
Yeah, but that means that the weather comes.
I went to, obviously not in Consensus now. I went there like a couple of years ago, and I just remember being so hot in Austin. I think it was around the same time per year. Like I was walking for 5 or 10 minutes, and I was dying. And I live in Miami, and it felt like way hotter. So yeah, it's kind of. I guess there's tornadoes there, but it's kind of crazy to think like right now there would be like hail.
Yeah. So there was hail actually. So a lot of people that were flying into Dallas weren't actually able to make the connection. I think a lot of people. Yeah.
Man, what is up with these conferences? Like it reminds me of Dubai, but hopefully it's less severe.
I know, but we're not a Consensus. We're here streaming for you all.
So is the conference even happening? Like
no, it's going on. It was just like one day of weather. It passed us through. I mean, those weather systems inside the middle of the U.S. move pretty quickly.
It's a huge conference, right?
I think it's one of the bigger ones of the year.
But by the way, I was asked this yesterday, and I have no idea. Like, the big conferences, are they called conferences or conventions? Like, what's the better word?
What's the difference? Well, convention has like a hall, right? Where you have
actually have no idea. Like, and someone yesterday told me that no, convention is if it's big, and conference is a bit smaller. And I was like, really? Like, I have no idea. Honestly, I need to ask the guys.
Yeah, convention usually has like a hall, so it's pretty big. Conferences are probably a little bit smaller, and yeah. I don't actually know. I think it's probably just like loosely used between the two, right? It could be a convention.
Really, I have no idea.
I always thought conventions were like a little. I don't know why. I don't even know if this is true. I always thought they were like a little bit less like event based. I don't know, and more kind of like ad hoc gatherings. Well, like a conference feels like more scheduled, and conventions also feel a little bit bigger. But I don't know. I really don't know the difference. That's just something I've always felt.
I think in other industries, there's probably a bit more of a difference, right? In crypto, all the conventions / conferences are somewhat the same, where you just have panels and everything, and then you have a lot of presenting booths and sponsors and stuff. Like, I think if you have like physical goods or something, and you're going to like, what are some of the big conventions? Like a convention could be like for like anime convention or like baseball cards or something, right? Like the conference is more you're speaking and learning about stuff. ETH Denver's a conference. I don't really know. It's hard to say in the crypto land.
I have no idea. By the way, what are like the biggest conferences? Like you say, Consensus is one of the biggest every year.
I think Consensus, ECC, ETH Denver, whatever the Ethereum Developer Conference is. And then what's the one? Oh, and Token 2049, I think, are the big ones.
Yeah.
And they're all like they're all coming up. It's all in the summer season, except for ETH Denver.
Token 2049 was already like this year, a few months ago, right?
I thought it was last year already.
Yeah.
I think there was 2 this year, maybe. Like one.
Wasn't it the one in Dubai? Wasn't it Token 2049?
There's one in Dubai, and I think there's also it's been in Singapore before, so there might be 2 this year.
Mm-hmm. Yeah, the one in Dubai was in April. The one in Singapore is in September, and I think the one in Singapore is a little bit bigger. Yeah. All right. Well, let's wrap it up with the news. We got options trading to talk about.
Woo!
We get to talk about the fun stuff now. Let's talk about GammaSwap. So, mentioned in the beginning, pretty much all of DeFi is built on options that people don't really know, and that's with the basic Uniswap, AMM, V2, LP, even V3 LPs are options as well too, just a little bit different flavor. And people figured out back in like 2022, 2023 that the payout curves for a Uniswap V2 were roughly similar to an option, right? And so if the only thing that you wouldn't have here is that it's almost like a perpetual option instead of a fixed option, like fixed American option.
Yeah, that's right.
Where you have like a fixed payout and a fixed expiration. In crypto, you have more of like a perpetual option where it's ongoing based on the amount of collateral that you have, and then the fee that you're paying for it is variable based on the utilization rate. Similar to what you have when you're borrowing funds from Aave or any lending platform, right? The more demand there is to borrow, the higher the fees are going to be, and that really should translate into the implied volatility of the option. So, like, without getting too deep into the Greeks, which we might get into a little bit later, that's kind of how it works, right? And so, if you're providing LP to Uniswap, you're essentially short Gamma, right? You don't want the prices to move either way in too much, right? You kind of want it to sit in the same place, and you want people to trade back and forth. And then all the swap fees you would collect, and then you would also collect the utilization fees when using something like GammaSwap. And so this really kind of came about because a lot of people have been doing a lot of work on Uniswap profitability or AMM profitability. And because of some inherent features into Uniswap AMMs, or just AMMs in general, like the inability to change the fee structure, as well as it's always getting picked off last. You come up with some interesting issues for market makers that are trying to be solved with this new options protocols that have come out. And so GammaSwap is one of them. It's deployed on Arbitrum, and they have some really cool strategies that you can use to go out and trade Eigenlayer point or collect Eigenlayer points, or any of the other points that are out there, like Ether.fi, Renzo points, and Pendo points as well too. So we have Devin here today, who's gonna kind of help us walk us through what you can do on GammaSwap and how you can go out there and make some money.
Yeah, awesome. That was a great introduction, Sam. And yeah, I think you expressed it very well. So I guess maybe a quick background on us, like the team, and how we got to this idea. So yeah, as Sam was mentioning, there's been a lot of research on profitability in AMM. So something our CEO has been a crypto trader since 2013 and full-time since 2016. And so when DeFi summer kind of happened in 2020, he thought AMMs were basically like one of the best financial inventions because, yeah, you have infinite liquidity, unlike an order book. So you're basically insured that there will always be, a bid that's filled. Maybe the slippage is high, but you'll always have liquidity to fill a trade. And yeah, you could support any asset permissionlessly. But as those incentives gone down, he kind of started doing the math and realized, oh yeah, this actually isn't great deal to LP here. I want to short this, and didn't find any way to do that. So he wanted to build it. And then a lot of kind of important conclusions came from that, which is, these DEX LPs are essentially selling volatility in different ways, V2, V3. They're essentially selling options, but no one can buy them from them. So they're, taking on volatility risks and are paid in volume. And those are correlated, of course, but they're not the exact same thing. So, I think a lot of newer kind of like protocols are taking different approaches here. Like you have Ambient with the swap fees that are based on the volatility, which is an interesting different approach. You have things like GammaSwap where we're actually transforming the borrowers into option purchasers and paying the LPs that way, and a few other approaches. But we've been working on this since research mid 2021, and actually building this out as a team since end of 2022. And we've been live now for a bit on Arbitrum and Base. And so essentially what you can do in GammaSwap is it's kind of similar to like maybe like an options market or something like Pendle, is that as a trader, you're betting that the yield that the LPs are getting is not paying them for their risk. That's kind of like the simplest way to think about it. So that the volatility you earn is going to be higher than the APRs you make. So we have some LRTs on our platform like Ether.fi, and then some altcoins like Pendle as well. The LRTs are interesting because if you're a trader and you're basically leveraging points, you can kind of think of that as part of the APY. So it's not specifically in the actual rate that you're getting, but it's an implied APY. And so if you think about that from a trader's perspective, is all those points they're earning is kind of paying for their funding. So like that's a good example, the Ether.fi pool there. So although the supply APY is 11%, the LPs, they're making the additional 3% from the staking, and whatever the points are worth, let's say it's like an extra 10 or 20%. And so you actually have, which is interesting because that pool often has, people are paying more to borrow there. The funding's higher because people kind of realize that there's that implied APY there. So you can leverage your points in the straddle up to 130x for Ether.fi, up to 65x for Eigenlayer. And then generally, what you have here is these different trade positions that are composed. So one of the cool things about GammaSwap, and one of the reasons we chose to build on UniV2 style AMMs, was to keep the product very simple and avoid liquidity fragmentation. So what we realized is that we could essentially create these perpetual options positions without any liquidity fragmentation across strike price, and without any liquidity fragmentation across expiration. It's just all from the same pool. So the way it works is, I'll share my screen here. The way it works is, you basically would put a deposit down, and then you can see the total notional size of your position in dollars, the time to liquidation, and then all of basically the relevant details about your position. So the time to liquidation again, the LTV. So essentially, the way GammaSwap works is when you borrow liquidity, we're actually burning the LP tokens for the underlying collateral. So in this case, the WETH USDC, but we hold that in the smart contracts, unlike something like Aave where you can custody it. And if there's any volatility, that collateral is growing faster than the value of the debt. So that difference, the impermanent gain, is your profit. You have an opening cost based on the utilization of the pool, your delta calculation, which is basically measuring how much your position value changes as the position price changes, since the leverage isn't fixed like a perpetual future. And then the funding rate, so how much you're paying a day to hold your position. And then you can see, different price scenarios. So the straddle, how much the price would change to profit, goes both ways. The long, and the longs are pretty cool because you kind of have this asymmetric upside with less downside. Like your max loss is with this leverage is negative 58%. And then, yeah, if the token goes to zero, you'll actually profit. On ETH, ETH, we're probably not expecting that, but in altcoin we're trading. That's a good feature to have. And then the short as well. So yeah, you can see your P&L there. This is just taking into account the profit from price movements. We can't really take into account, the funding rate because that's going to change and depends on how long you hold your position. But this is a way for our users to kind of visualize their different P&Ls. And then we have some alts, on Pendle where potentially like the straddles make a lot of sense because, like 50% price movements have been, pretty typical. Actually, I can't see back before here, but yeah, you could see like 6 to 4, which is I think like a 30% price movement, and then yeah, back to 7, and then yeah, if you held your position for a really long time, I think it was actually, like 2 or 3, like beginning of this year maybe. So a lot of volatility for people to trade. So this has been a fun pool, although a little bit smaller, that people have been enjoying.
Yeah. So what I really like about the straddles is that you can just say, I just think there's going to be volatility. Like the price could go either way, and it looks like it's moving a lot right now. There's a lot of movement, and so you can just buy a straddle and get leveraged up here and have like 30 days on your $100 for 30 days.
Yeah. So
Seems pretty good.
Yeah, so these positions are all perpetual, and it's not something we've had available in the UI, but we're about to release this in the next day or two. But you can essentially keep adding collateral to keep your position open without any cost. So that time to liquidation, you could extend it essentially. So if you wanted to max leverage to point farm, for example, you could have it here where, and this is a bit risky because these APRs are variable, but maybe something like 5 days to time to liquidation. And then every couple days you add a bit of collateral, and that way you're basically max levered up in terms of the ETH in your straddle and the points you're earning. But yeah, you don't actually have to close out your position. So that's something kind of yeah, I would say like different as well than of course like a typical option, is that time to liquidation is not fixed, it's flexible, and you could basically hold your position forever if you wanted to.
It's pretty cool. So the like the Arbitrums, so the ETH thing here, right? If you actually take the straddle, you can earn, what was the maximum amount of points that you can earn? It's like 130.
Yeah, I think it's 130 for the Ether.fi because we have a 2x multiplier, and the Eigenlayer is up to 65x. We've been looking, at some strategies where it would just be, you would open a position that would just be to maximize your ETH exposure. We don't really have that available yet. We're still thinking through it, but right now, yeah, up to 130 for the Ether.fi points and up to 65x for Eigenlayer.
So if you're kind of bullish on the Eigenlayer points and the ETH or the Ether.fi points, then this is one of the best places to get leverage. Is there anywhere else where you can get more like 100x leverage on the points?
Not that I know of. Yeah, I think Pendle YT is probably one of the more competitive point venues, and I think I think there's some YT tokens where you can get like that type of leverage. I think, yeah, it's just kind of a different type of position than something like Pendle YT, because Pendle YT is something you could hold passively, but there is kind of a decay there, and if the implied APY is much higher than the actual APY, you kind of write all that off to pay for the points, which yeah, I think a lot of people are happy making that trade, and we're successful making it. So with something like GammaSwap, it might be a little bit more active, especially if you're on that kind of like max leverage, because you're going to want to add collateral and kind of monitor the position. But if there's a lot of volatility and the price was to go up a bit, like I think a couple months ago or a few months ago, ETH was around like 3,000 or 3,200, and now it's closer to 4,000. So that's essentially like, yeah, around the 25% price increase. And if you're max leverage on a straddle, that could be something like 75x profit. And if you're paying, 2% in funding a day, then that's essentially paid for 30 days of your position. So, of course, if it didn't go up, then, that is kind of like funding that you paid just for the point exposure. But if you're expecting a lot of ETH volatility, it could help, because essentially you're trading that APY and GammaSwap, could help essentially reduce your funding. Well, you'll have that profit, and then the points exposure is basically exposure you have that kind of pays for that APY, that funding rate that you're paying.
Okay, so let's talk about this again. So in Pendle, you're just kind of buying YT, and you have exposure to ETH price. But if the ETH price moves a bunch, I mean, you might lose money on the ETH price if it goes down, and you're also farming the points there because you're buying the yield. With the GammaSwap pools, right? You can get exposure to points and kind of protect yourself from price volatility. So if you think markets are going to move a lot, you could essentially take one of these straddles by essentially buying a straddle, like pushing the leverage up quite high, and then hoping that the market moves a bunch. And if it does, then it would pay for the position itself.
Yeah, I think in YT, if you actually get in pretty early, the price could increase if there's a lot of buying demand. So there's also some interesting dynamics there, where you could benefit from that as well. So I think in GammaSwap, yeah, you're getting a similar kind of point exposure, but you have to maintain it a little bit more actively. But you can directly benefit with leverage from any ETH price movement that will pay for what you're doing there. And yeah, it's a way essentially where that APY that you're getting from the points is helping kind of pay for that funding rate.
Yeah. And so the funding rate, essentially, if you buy the straddle, or if you buy one of these like long or short options, like there's no liquidations. You might lose money if it for the straddle, if it doesn't move anywhere, if it just kind of sits in the same price for however long your loan is for. And obviously the directional bets could go against you if you go long or short. But if you do catch the move, then there might be quite a bit of P&L, plus you get a bunch of points as well too.
Yeah. So there's liquidations in GammaSwap. They're just not based on price. So if there's a massive like price wick, for example, you're not going to get liquidated for that position. But if the LTV crosses the threshold, which is 99.5% in the platform, you can get liquidated. A cool thing about GammaSwap, though, is that just because you're liquidated doesn't mean you lose all of your collateral. Like you basically lose whatever was left. And if you have any profit, you can maintain that as well. So I think you just get docked whatever the liquidation fee is, so like the 0.2%. But you keep the rest essentially. So you're not, down on everything if you get liquidated in GammaSwap.
Yeah. Yeah. Well, that's pretty cool. So how do you guys manage like the non-big pairs? So like the altcoin, like the meme coins. You guys have meme coins on here, right?
Yeah, we have Boop, which is kind of like a popular culture coin on Arbitrum. And the way we can support assets like this is because we measure the debt in the invariant. So the x times y equals k. That just depends on the supply of the two assets, x times y. And then the k is how we're measuring the debt, which grows with the growth of fees in the AMM. So that's one of the reasons why we can support all these different assets without an oracle, and that the debt, your position isn't based on the price in terms of, whether it's going to be liquidated or not. It's purely based on the LTV or the utilization and how long it takes you to cross that threshold. So yeah, you could essentially, like, I think straddles are great positions for altcoins because yeah, you might be nervous about the price going a certain way, and then also there's some price impact for the long and short. So the straddles have no price impact. So I think it's something, that would work well for these type of pools. Okay. But yeah, you could essentially have some of these positions like this and basically see your whole position and the P&L here. Yeah, I'm not really sure what's negative here. So might have to do.
One thing that I thought was interesting is that you can build out kind of delta neutral strategies as well too. I saw this really cool thread about using Silo to take some USDC and then deposit some of it into, let's say, I think it was like 15,000 USDC, and then you could deposit some into what's it called, into Silo, borrow out Pendle, and then throw that onto, or it could be WeETH as well too, and then throw that into the pool you have, and that essentially creates a like a delta neutral position that you can farm GammaSwap points with.
Right. Yeah. So I think there's a lot of interesting things you can do with money markets essentially, because what you could do is like an ETH USDC pool is you would essentially borrow one of the tokens, so you're short it and then deposit it in something like ETH USDC. So you would short ETH and then put that in, and then your deltas are neutralized, so you don't have the same delta exposure. And then as long as the supply APY is higher than the borrow APR, you'll be profiting and farming points in that solution.
Yeah.
There's I think you still have some IL risk, which is a little bit harder to hedge, but that's one of the things you can do in GammaSwap. So a thread we're kind of working on is there's some arbitrage opportunities in GammaSwap. Like I think the ETH USDC is paying like 3 or 4% on Arbitrum, and then it's paying something like 80% on base. So you could essentially borrow in the pool with the lower APY, and then provide liquidity in the pool with a higher APY. And then if the positions are matched, you're not only like delta neutral, you're gamma neutral, so volatility neutral. So you don't have any IL risk as well. I mean, these are V2 AMMs, so the IL isn't crazy, but if you want to be completely, price neutral, market neutral, that would be a good way to do it. And also, just collect some yield kind of risk-free.
Nice. That's pretty cool.
Yeah, so I'm working on some of that. I think that's, one of the difficult things about building something new is that I think people might be interested in it, but it's kind of difficult to explain and educate people on how to actually use it. So I really like what Pendle does with their kind of like spreadsheets and moon sheets and just explaining like different strategies. And Silo also does a lot of that well, often using both platforms, which is really interesting. So we're trying to get more kind of like content out there to educate people on different strategies they could use, because it is something new and a bit difficult to understand potentially when you're first like coming here.
Yeah. So what's your favorite strategy at the moment?
My favorite strategy? It's a good question. I think something I've been doing a little bit is I've been, when I see volatility, like the APRs in Pendle are a little bit low, I'll, for like a straddle position, I think there's gonna be volatility. I like speculating a little bit with the straddles. Another thing I've been liking to do is provide some liquidity in the WeETH USDC pool, and then going short on another platform, for example, like Hyperliquid, and then you have exposure to 4 points programs, and then you're collecting positive funding from the short, so you're delta neutral, but you still have some IL exposure. But if it's pretty minimal, and if you think the price is going up, there's even less, because there's a little bit more IL when the price goes down. So there's a little bit of risk there, but you're collecting higher APYs. So it's kind of not that big of a deal.
Right. Okay. So let's talk about that for a second. So if you're looking at some of these supply APRs, so let's take some of like the vanilla pools, like the WETH USDC pool currently has a bar APR of like 3%. You could take a long option there, right? And then essentially hedge that out, the notional amount. So let's say you take a long option with $1,000 notional. You could go over to Hyperliquid and hedge that out, that $1,000. And the idea would be is that the funding rates over there would be higher than the 3% that you're paying. And so you should be completely hedged out at that point. And you can essentially farm funding that way.
Right. Yeah. You could. Yeah, it gets pretty interesting with the deltas, but you could have something where you basically create a straddle-ish, because Hyperliquid, the leverage is fixed, and GammaSwap it's not. But you could essentially go long on GammaSwap, go short on something like Hyperliquid or GMX, and then you're collecting all of that positive funding. You're going to make profit if the price goes down, and you're paying for that kind of like long in GammaSwap. So if the price goes up, you'll also profit, asymmetrically. And then the cool thing is, if price goes down,
you could buy the straddle and then hedge the short side delta, right?
So what you could do is that if you think the volatility is priced too low for something like ETH and GammaSwap, what you could do is you go long on GammaSwap and then you go short on a platform where the long funding is higher. Because if the long funding is significantly higher there, you're essentially paying for your long in GammaSwap, but then you also have one position that's long and one position that's short. And if you go long in GammaSwap, the leverage is increasing. So if the price increases a lot, you'll still profit. And then if it goes down in GammaSwap, since the return is kind of asymmetric, you should still profit on your short. It's going to be something where, your leverage exposure on the short side is maybe like, if you're matching it up like 0.5 to 1x, and then on the long might be like higher, like 1 to 3x, but you essentially have a straddle position that is being paid for, that you're collecting like a positive APY on, which is cool, because you profit if the price goes either way, and you're not even paying for it anymore.
Nice.
So there's some. I've been looking at some of those strategies. I think funding was really high for a little bit. So I think there was a time where that would work. I'd have to check now if that's something that's like feasible with current rates. But at certain times when funding's very high in these perp platforms, like I think coming into the ETH ETF, like some of those strategies could be interesting.
So what are you guys working on over the next few months?
Yeah, so we got a lot going on. So we're launching on Ethereum this week. Going to start partnering with more LRTs on Ethereum. Then we have, we're going to be, launching with our full kind of like tokenomics soon as well, and liquidity mining instead of the points program. And then, there's a bunch we actually want to do after that. So we have an idea for kind of like a fixed leverage product that's similar to perpetual future, but no liquidation price and less price impact. We want to actually create our own AVS, which is an Eigenlayer AVS. So it would be pretty cool to implement kind of into the tokenomics design, and then be more like decentralized. And then we have an idea for a V2 version of our protocol with more leverage, like concentrated liquidity without any ticks or ranges. So we have a bunch of things to work on. Unfortunately, not a ton of time, but I think there's going to be a lot of things that we're going to be continuing to build in the future that will give people different types of exposure, and also in the future like more capital efficiency as well.
That's really cool. I think it's really interesting. So where can people find you? And then because you have some great threads.
Yeah, so People can find me on Twitter at OX DeFi Devin. I'm pretty
OX DeFi Devin.
Yeah, exactly. And then our GammaSwap Twitter is just GammaSwap Labs. So yeah, we typically post strategies on both accounts, so that might be interesting to follow, and going to be continuing to kind of push more and have some exciting updates. So yeah, if you found any of this interesting, would recommend doing the GammaSwap account a follow.
Really nice. DeFi Advisor, I think we learned a bunch in this.
Well, I hope at least you and some of the viewers understood a part of it. For me, yeah, I did, but it's always like a mirror for me on how much there is like for me to learn about the whole field, because at some point I was like, man, these guys can take it to such a deeper level, which is actually so useful. So I really urge both myself and others to try and keep up and educate themselves, because I think that it's such an amazing tool, like options, for those who know how to use. And I think that the more we can simplify the process, like if there was one thing that I was hoping to ask, like what kind of like simplified versions maybe for this can you offer, like some of like the not such as sophisticated users as myself, for example?
Yeah, no, it's a good question. I think it depends on the type of, exposure you're looking for. I think like vaults are great products to kind of simplify things for people. So it's something we're hoping as we like build more liquidity that we'll have, partners that we can build these products with. I think we've kind of decided that, yeah, it's better to build an ecosystem and let other people kind of build these out because they can also focus their full attention. So we have one vault that we're going to be building with a partner called Copra Finance. So essentially, what it's going to do is it's kind of like a Pendle type of product, but it's perpetual, and so lets people speculate on fixed versus variable yield as a lender in GammaSwap. That's a little bit complex though, but you could basically, if you wanted to, just get like a fixed yield, like a PT token, and then it simplifies a lot of the monitoring you might want to do as a lender or these different exposures. But yeah, then in the future, we're hoping to build out vaults with partners, that would hedge IL for people automatically. Something like Lyra's new vaults that I'm a big fan of, like just a covered call strategy, or maybe you're farming some, LRTs as well. Yeah, and just kind of these like structured products. But yeah, because we also, have a bunch on our roadmap and want to build more to make it easier to kind of build these different strategies. We're kind of focused on, I guess, GammaSwap as a core primitive. So hoping, yeah, as we gain more liquidity, we can build these vaults out with, yeah, other protocols and support them and support other builders as well. So we have a few ideas, but yeah.
That's a good point, actually, and it's one of the most fascinating thing about DeFi. This kind of like horizontal and like way to compose different products, and I really think that, in my opinion, there will be quite a big market for these kinds of products, because I think that for so many people, including myself, it's much easier to take the lazy choice and like hope that someone builds an automated tool to enjoy the benefits of all this stuff. But you guys are proving a great point with the fact that if you want the real alpha and the real advantage, you should learn how to do it before the product exists, and you'll have a whole other advantage. But yeah, I think that there will be a huge PMF for whoever learns how to offer interesting structured products that are based on these various strategies that you guys have talked about here. Like it's honestly fascinating.
Yeah, and I don't even think it's like a laziness thing. I think it's just, everyone, we all have, different demands. Not everyone has time to spend on this, and it takes a lot of time to monitor some of these positions. So I think, that was one of the originally like really cool thing about vaults is just this is a strategy. It's managed by contract, and so you don't have to think about it as much. So I think they're a huge use case. I think what we can do for people who want to build those or fellow builders is make GammaSwap as efficient as possible, so those strategies are more like interesting for people. So we're kind of focused on that core phase right now of building that out, and then hopefully as protocols come in and build different strategies, we can support them. And I think also there's going to be a lot of people that have really interesting ideas that we never thought of as well. So if we can get other people, especially if we could do like a grants program in the future, like other people to just kind of like ideate and strategize on those, I think the amount of products that can be built is like greater than what we could think of ourselves as well. So that's another reason why we'd love, as we expand, for other builders to actually come in and think of those and build those and focus on those.
Very cool. Well, thanks so much for being here today. And thanks everybody for tuning in to this episode of Leviathan News. You can find us at Leviathan_.news on both Twitter and Telegram. And we also have Substack as well too at leviathannews.substack.com.
Man, guys, Sam started doing the Substack, and it is next level. Like I don't know whoever has read it already or not, but this is far beyond like what you guys are thinking. I just saw the recent one yesterday, and it's like I told the guys is it a newsletter or a newspaper? It's next level, and I definitely recommend checking it out. The Tentacle on leviathannews.substack.com, Sam?
Yes. Yeah, or just leviathannews.substack.com.
Yeah, great.
And we had a great post that went out yesterday on hieroglyphs or hieroglyphs, as they want to call it, the newest thing from OX Maki of Sushi and a couple of other people. So I think that what we wrote is probably the best explanation of hieroglyphs so far. So worth the read. Definitely check it out. And go check it out.
For sure.
All right.
Thank you guys for having me.
Yeah, thanks, Devin. Thanks for being here.
Thanks for coming, man. Good luck with the GammaSwap.